Welcome to SIRA MCQ YouTube channel. Today we discuss advanced level A-level accounting paper 2025 question number 14. Let's go to the question number 14. Question number 14 and 15 are the questions already related to one information. Okay, let's go to the question. Firstly, I read question number 14 and 15. Both of them I calculate together. Okay, let's see. Look here. The goodwill of the partnership, estimated on 31st March 2025. There's a goodwill. Their requirement is goodwill of the partnership estimated on 31st March 2025. Okay. The second one is the equity of the partnership as at 31st March 2025 after the retirement of VAS. Look here. Total equity. Total equity means capital accounts and current accounts. Okay. Total equity of partnership as at 31st March 2025. Closing date. This is the closing date. This is the closing date. Closing date. After the retirement of VAS. There is a VAS is retiring. After the retirement. After the retirement means the VAS is gone. Okay. After the retirement, the equity of the partnership. In that case, there are two requests. One, what are they? There is a goodwill. How can a goodwill identified using the which account? Capital account. You know the goodwill must be calculated. Credit and debit shots are related to capital accounts. Therefore, I prepare capital accounts. And this is the equity of the partnership. Equity means both capital accounts and current account balance. Therefore, I prepare firstly capital accounts. Okay. Firstly, I prepare capital accounts. There are three partners. There are three partners. Firstly, I prepare capital accounts. This is the easy structure. This is the capital accounts. There is no credit and debits, only plus and minus. Therefore, you know capital accounts are credit, normally credit. Therefore, are there any credit shots to capital accounts? I add this amount. There is a credit shot, I add this. And there is a debit shot, and this is the opposite of normal side of capital. Therefore, at the debit shots, I minus to the capital accounts. Look here, capital accounts are credit dials. Okay, there is a credit shot, I add this credit shot to this column. And what is the another requirement? You must be prepare current accounts. Current accounts. This is the same rule. What is this? Current accounts are credit dials. Therefore, all credit short I must add. Okay. All debit short, this is opposite. All debit short you must minus. Okay. All credit short you must be add this. Okay. All debit short you must minus. Okay. This is the rule. This is the capital accounts and current accounts. Let's go to the question. Using the capital account, I identified goodwill. Using the capital account, I identified goodwill. Okay, look here. Let's see the question. The question says that this is the information. Use the following information to answer question number 14 and 15. Look here. Saman, Ram and Vas. There are three partners. Saman, Ram, Vas. SRM. Saman, Ram, Vas. Saman, Ram, Vas. 3 partners. Saman was, Saman, Ram, was. There are 3 partners. Okay, let's see. 3 partners. 3 partners. Look here. Saman Ram was carrying out a partnership sharing profit or loss in the ratio 5:3:2. 5:3:2 respectively. What are the partners' profit or loss ratio? Look here, I prepare this. Partners' current accounts using profit or loss are sharing ratio Saman, Ram and was 5:3:2. This is the profit or loss ratio. After that, they said that, look here, respectively, the following account balances of the partnership were available as at 1st April 2024. Opening or closing? 1st April 2024. Opening balances. Opening balances, capital account, credit, normal. Saman 6,000, Ram 4,000, 2,000, was 6,000, 4,000 and 2,000. Capital accounts balances. Therefore, I go to the capital accounts balances. This is the capital accounts opening balances. Opening balances. Opening balances 6,000, 4,000 and 2,000. This is the balances. There is a credit balances. Therefore, I add this. Okay. 6,000, 4,000 and 2,000. Look at the next information. Current account credit. Credit balance means normal balances. 800, 400, 200. 800, 400 and 200. There is a current account balances. Current accounts there. This is the opening balances. Opening balances. Opening balances 800, 400 and 200. There is a normal balances. Why? This is a credit. Credit is plus. Look at the balances 800, 400 and 200. Let's go to the another. Let's see. Interest free loans. Interest free means there is a no interest. Interest free. Interest free means no interest. No interest loans given by partners 500 and 300. Okay, let's go to the question. Partnership earned a net profit 1,000. Okay, 1,000. This is the 1,000, no, 1 million. 1 million for the year ending 31st March 2025. There is a net profit of the business. Okay, was retired. Look here, was retired. We must highlight was retired. Was means this person. In the current and capital accounts, this is the was. Was is the retired person. Look here. Was is the main person there. Was retired from the partnership on 31st March 2025. Which date? At the end of the date. Look here. Was retired from the partnership on 31st March 2025. There is a retirement of closing date. Okay, let's see. On this date, the goodwill of the partnership was estimated and it was adjusted through the capital accounts. You know, there is a goodwill must be identified, calculated and adjusted through the capital accounts. They said, on this date, goodwill of the partnership was estimated and it was adjusted through the capital accounts of the partners. Okay, let's see. The total amount due to was at the retirement. At the retirement, total amount due to was. Due to means payable. To was, including his loan was 3,000. 3,000 means 30 million. Okay, let's see. 3 million. This is the 1 million. Okay, let's see. And It was agreed to transfer the amount to loan account. This is the payable amount should be transferred to loan account. And this is Saman and Ram agreed to continue business as a new partnership, sharing profit or loss in the ratio 3 to 2 respectively. Saman and Ram. This is the new profit or loss ratio. Look at this. This is the old profit to loss ratio. This is the old ratio. This is the new ratio. 3 to 2 is Saman and Ram. There is no was. At this is the retirement. At the retirement, this is the closing date retirement. Ending retirement. At the ending retirement, end retirement. End retirement. Retirement. End retirement. This is the ending retirement. This is the ending retirement. What is the flow? What is the structure? What is the flow? Steps to retirement accounting. Look here. Firstly, this is the closing retirement. Therefore, this is the ending retirement. You must be firstly calculate the profits. Okay. You must prepare the P&L profit or loss statement. Firstly, statement. After that, you should be give what are they? The closing retirement. At this closing retirement, retirement partner can be eligible to get partner salary, profit or loss, and the partner salary. Therefore, we must give them the profit shares and interest on capital. We must firstly prepare, look here, firstly prepare profit or loss statement. Secondly, we must give what are they? Interest on capital. Interest on capital. Interest on capital. Secondly, no, this is the give interest on capital and partner salary. Partner salaries and profit shares, profit or loss shares. Why? This person, this retirement person is go away from the business at the closing day. Therefore, in the current year, he contribute to profit earning. Okay, he contribute to profit earning. Therefore, we should be give interest on capital, partner salaries, profit or loss shares. After that, we must prepare and balance the, this is the retirement person related transaction. Now, we must balance current accounts and transfer the current account balance, to capital accounts. Current account balances should be transferred to capital accounts. After that, we must look here. What is this? Is a special one. We must adjust goodwill adjustment. After that, there is a payment to partner as equity. There is a payment. Assets transferring. There is no asset transferring or payment of cash. Assets transferring. This is the first one. The other one is cash payment. Cash payments. cash payments. Finally, we must transfer this balance, transfer the capital account balance of this retirement person, capital account balance, account balance to where? To where? Capital account must be balanced and transferred to where? Loan account. Loan account. Loan account. Loan account. This is the method you can identify the elimination of there is a retirement of partner. In that case, what is the requirement of this question? The question is required the goodwill of the partnership. Goodwill of the partnership. Look here, this is the middle. This is the goodwill identification is fourth adjustment. Okay, this is the middle identification of the goodwill. Therefore, you must be prepare this side and this side. This is the normal side. Firstly, you prepare this income statement, give the interest on capital, partner salary and profit or loss shares. After that, balance current account balance current accounts and transfer the current account balances to capital account. After that, you meet adjust goodwill. And another one is the final one is the final stage. You must be meet this goodwill. There is a two sides. You go this side is a finish. This is the final to middle and start to middle. This is the middle. You must identify the goodwill. Okay, use these steps. Firstly, you go to these steps. First one, you prepare the profit or loss statement and you calculate profit or loss. Look here, this is the profit or loss was calculated. What is the value? Value was 1 million. 1 million means 1000. Net profit is 1 million. 1 million means 1000. There is a profit or loss statement. There is a calculated profit or loss, profit 1000. After that, you must give interest on capital. There is no interest on capital. Don't give. There is no partner salaries there. Don't give. This is profit or loss share. You must give profit or loss shares. You know what is the double entry for profit or loss share? Double entry or destinations, no? You know what is the double entry. Profit or loss shares, you must credit to where? Current account credit. Current account credit. Current account credit. Debit to where? Debit to profit or loss, P&L, appropriation account. Appropriation account debit. Appropriation account debit. Okay, current account credit. Current account credit, P&L appropriation account debit. This is the final distribution of the profit or loss. What is the ratio? You must be identified as a profit or loss ratio. Old or new? Old ratio. Why? The VAS was retired in the closing day. Therefore, you should be give profit to VAS. Why? VAS is carry out our business in current day. Why? He retired in the closing day. Therefore, we must use the old ratio to give profit or loss shares. 5 to 3 to 2. Therefore, I distribute this 5 to 3 to 2. This is the shares 500, 300 and 200. You must divide in 10. Why? 5, 3, 8, 10. Total is 10. You must be divided in 10. This answer is 100. there is a 5 of hundreds is 500. This is the 500, 300 and 200 are the profit shares. You must be identified as this. Profit or loss appropriation account debit. This is the location is, you know, at the preparation of the profit or loss statement, after the profit, you know, this is the deduction. Look here, I show you, you know, this is the income statement, no? Income statement. This is the income statement. You already calculated net profit. Net profit. After the net profit, you must deduct what are they? What are they? Interest on capital, partner salary, profit shares. This is the only allocation of profit shares. Profit shares. What are the names? Names are summon SRV. SRV. SRV 5 to 3 to 2. The profit shares are this one 500, 300 and 200. You must deduct. This is the profit shares deduction. This is the profit or loss appropriation debit shot. Okay. After that, you prepare current account credit. 500, 300 and 200. You must be current account credit. You must add to current account. Why? Current accounts are credit dials. Look here. Current accounts is there. Current account is there. Current account credit, no? See this? See this? Current account credit. You must be add to current accounts. Why? Current accounts are credit. Okay. Add what are the profit shares? 500, 300 and 200. This is the profit shares. Profit shares. Profit shares. This is the steps. What is the next step? This is the second step we followed. What is this? Look here. We prepare profit or loss statement. After that, we distribute the profit or loss ratio. The second one is okay. What is the third one? What is the third one? Third one, balance of current account. The retirement person. This is related to retirement person. Balance of current accounts and transfer the current account balance to capital account. We must calculate the current account balance of retirement person. After that, we transfer this balance to capital account. At this time, there is a current account is there. This is a vast. What is the balance is 400. 400. At this time, you shouldn't transfer. Transfer means deduct. How can we transfer this? This is the credit. Look here. This balance is credit. Why? This is the plus. No, this is the credit balance. How can you transfer this? This is the credit balance. Therefore, to transfer, you must eliminate this. Therefore, current account of VAS. Current account of VAS, debit it. Debit it. Why? This 400 is credit. To elimination, you must debit to 400 to current account and credit to capital account of VAS credit 400. At this time, current accounts are debit. You must minus this from current account. Therefore, I minus this 400 and transfer where? I transfer to capital account. Transferring to capital accounts. Okay, this is the transferring of capital account. Why? You must deduct from current account. After that, what is the another short? Next short is capital account credit. Capital account credit, you must add to capital account. Why? Capital accounts are credit diets. Therefore, you must add this to 400 capital accounts. Capital accounts 400. This is a credit. These are capital accounts. Credit short, you must be add this. This is the current account. Current account of was. Okay. After that, what is the next step? Next step is the crucial one. Look here. Next step is adjust goodwill. There is no goodwill identification. Therefore, you must again fulfill the ending point. Look here. Asset transferring. There is no asset transferring. Cash payment. There is no cash payment. What is the final one? Transfer the capital account balance to loan account. Transfer the capital account balance. After the goodwill adjustment, you must be balance the capital account of the retirement person. Look here. After the goodwill adjustment, you must prepare and you must balance capital account balance. After the balancing of capital account, you should be transferred to where? Loan account. There is a question said then there is a transferring of loan account. Look here, this one. Total amount due to us, total payable to us at the retirement, including his loan, was 3,000 and it was agreed to transfer to loan account. Okay, there is a 3,000. Okay, the total amount due to us at the retirement, including his loan. Including means including his loan. There is a loan before the preparation of this capital account. There is a loan. Look here. Interest-free loan given by the partners is there 300. Including his loan means this 3,000 is included this old loan. Okay. Therefore, 3,000 it was agreed to transfer amount of loan account. At this point, 3,000 is a major point. You know, retirement date, we must balance. There is a goodwill. There is a third one is goodwill adjustment. This area should be goodwill adjustment. After that, you know, the balance of was capital account balance is transferred to loan account. There is a loan account transferring is 3,000. Okay, but this loan including the old loan. Old loan is which one? Old loan value is, there is a 3,300 loan value is old loan. Look here, there is a creation of loan. Look here, retirement total amount due to, this is a payable, total payable, including his loan is 3,000. It was agreed to transfer to loan account. There is a transferring to loan account is 3,000. This included, this is the old loan value. What is the fresh loan creating? 2,700. This is the old loan. This is the old loan. This is the new loan creation. This is a new loan creation is the capital account balance. Why? 2,700. Why? This 300 is already created, but the 2,700 is creating through the capital accounts. This is the new creation. This 300 is old creation. Therefore, at the retirement, the newly generated loan account is 2,700. Therefore, there is a goodwill adjustment related to this one. Why? This is already created 300. Therefore, I identified the loan transferring amount 2,700. At this stage, look here, there is a gap. There is a 2400 is the balance of vase. Look here, this area 300 must be added. What is the reason? 300 must be added. What is the gap? What is the reason? What is the transaction there? This is goodwill adjustment. You know what is the goodwill adjustment? Goodwill adjustment. We credit old ratio. We credit old ratio. Old ratio. What is the old ratio? You know what is the old ratio? Old ratio means 5 to 3 to 2. This is the old ratio is 5 to credit. Credit must be plus. 5 to 3 to 2. 2. What is the new ratio? This is another adjustment for goodwill. Goodwill. You must be debit in new ratio. What is the new ratio? New ratio is only related to SNR 3 to 2. 3 to 2 is 3 to 2 is debit. Debit must be minus. Debit must be minus. At this stage, you know, there is a goodwill adjustment. There is a one impact to vase. What's the impact? This is a two impact. Two impact is 300. Okay. We can identify the total goodwill using this. Look here, there is a two parts are 300. What is the one part? 300 is same to two parts. One part is 150. There is a three parts there. 150 multiplied by 3, 450 plus. Okay, this is the 5. This is a part 1 is 150 and there is a 5 parts 750 plus. You must be calculate and identify the total goodwill using these elements. What are these? This is the goodwill of Vas, this is the goodwill of Ram, this is the goodwill of Saman. Please add this amount. What are these amount? This one, and this one. 750, 450 and 300. Please add these. 1500 is total goodwill. And again, goodwill adjustment is debit 1500 debit to 3 to 2, divide in 5, 3 and 2 is 5, the one part is 300 multiplied by 3 is 900 minus 300 into 2 600 minus. This is the goodwill adjustment. Look here, what is the goodwill adjustment? 1500. How can we identify the gap of capital accounts? Therefore, there are two parts are 300 of goodwill. Therefore, I identified one part is 150. There is a total parts are 2, 3, 5. There are 10 parts. We can easily identify, multiplied by 10 is 1500. Okay, this is the adjustment. The total goodwill is 1500. 1500 is answer there. There's a goodwill. Answer is answer number 1 for question number 14. We must calculate the answer of question number 15 using this information in next video.